Today we are discussing short-term stock market trading. I'm going to give you guys my 4 best tips on how to be successful as a short-term stock market trader. I cannot wait to share this with you guys today. Good day, subscribers! Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're talking about short-term stock market trading, and I'm sharing my 4 best tips on how you can make money and be successful as a short-term trader in the stock market. Now, for full disclosure, I am a long-term investor in companies mainly. That is the way I have found over time I can make the most amount of money throughout my investing career, so that's the way I primarily stick to. But I dabble in short-term trading here and there. I've made tens of thousands of dollars doing it. I've lost tens of thousands of dollars doing it. So today I'm here to share with you guys the things I've done well and those tips that are really good and the things I've done bad and that you should not do. So I'm going to share all this with you guys, and let's go ahead and get right into this. So number 1, most important thing is sticking with your plan. So when you're short-term trading in the stock market, you need to have a plan. It needs to be a very exact plan. It needs to be very precise. So for instance, maybe you're planning on playing company ABC's earnings the following day, so you go ahead and buy that stock. And your plan is, I'm going to sell the very day after earnings, and I'm going to get out of the stock completely right in the morning. It needs to be a very exact plan. Whatever happens with that stock, whether it goes up or down or whatever happens, you need to stick with that plan and get out of that stock at 9 a.m. like you said you were going to. It cannot be something where somehow a short-term trade turns into a long-term thing into the company, because that's not why you were looking into it. If you wanted to be a long-term investor in that company, you could have bought shares whenever or at that time and said this is a long-term investment. But just the fact that, say, you bought and then it went down, that doesn't mean that now you should hold it for the long term, because it's a short-term trade. I've seen so much money lost that way, because then not only does the stock go down that next day, but then it goes down the next day, and the next day, and then you're stuck in a position where you're down 20, 30% on a position, and you're like, what the hell am I doing with this stock? It just keeps going down. It was just supposed to be a one-day trade. I'm still holding it, and then people end up selling out at that point and losing a lot of money. So you need to have an exact plan when you're short-term trading. It needs to be exact, and you need to stick with it 100%. There could be no flip-flopping. It can no be going in and out. It needs to be an exact plan. So stick with it. Number 2 that I would also suggest is hedge your positions all the time. Now, hedging your position means you are basically placing a bet that the opposite of whatever you believe is going to happen. Now, of course, with that opposite bet, you are putting a lot smaller amount into that stock. So say you believe stock ABC is going to go up huge on this earnings. So you buy in that stock the day before earnings. You also might want to buy a small put position. A small put position. That way, if that stock drops huge that day, you'll at least save some face and you'll make some good money on those puts, because those puts will become much more valuable. They're put contracts, option contracts, if you guys are not familiar. Watch a video I did that's called What Are Options, where I discuss options, if you guys are not familiar with that yet. So you want to hedge your position. Same thing if you short a stock. Let's say you short a stock ABC, you think that stock's going down for whatever reason next week or whatever. Well, then you could go ahead and buy some call options, just a few, to go ahead and save some face if that stock for some reason shoots higher. So then your calls, will be worth much more money at that point. And then you can sell those off and then go ahead and sell off your position. You'll lose money, but you'll have lost way less money than if you would have went all in on one way or another. So short-term trading, you absolutely have to hedge your positions a bit, just so you can save some face if some reason what you think does not go correctly, because a lot of times it does. A lot of times it's a 1 in 2 chance of going right or going wrong. So that is very, very important to understand. Number 3, most important thing is you need to play devil's advocate. You need to be able to play devil's advocate and look at whatever you're doing, whether you're trying to play a short-term trade on a stock or long-term trade too, you need to do this. But whatever you're doing in the short term, you need to try to play devil's advocate. And why will that not work? Why will that trading strategy not work for the short term? what are the chances that that company reports great earnings and you were expecting them to be bad earnings, or vice versa? And then also, how much do they need to beat the analyst numbers? You got to play devil's advocate and play it all the way through and try to put your shoe on the other foot and say, okay, well, if I'm looking at it from this way, what are the chances this stock's actually going to go up versus going down and all those kinds of things? So you got to play devil's advocate. It's so important too, because you're doing a short-term trade. It's not like when I do a long-term trade, I do have to play devil's advocate and say, what if this goes wrong? What if that goes wrong? But I have time on my side. If I'm doing a long-term trade, I can hold that stock for years if I want to. Months, years, however long, decades if I really want to. Whereas a short-term trade, you're sticking to the plan. It's a one-day thing or a one-week thing or at the most a one-month thing. So you need to be exactly right. So it's very important to play devil's advocate. Number 4, last one, is do not short-term trade on margin. This hurt me substantially because I would basically assume and kind of run numbers and that a company would beat their earnings, right? And so beat analyst estimates and all those kinds of things. So then I would load up on that stock on margin. And a lot of times I was right about what the company did. They would blow out numbers or whatever. But sometimes that stock went down for whatever reason because the margins weren't what they were supposed to be, or because guidance was a little weak the next quarter. For whatever reason, that stock would go down. And then I would get burned because then I would have margin calls coming after me and all those kinds of things. So that's why I highly suggest you do not short-term trade on margin if possible. You have to have a margin account pretty much to short-term trade, because if you're short-term trading, you're in and out of stocks every day, every week or whatever, and it takes 3 business days for a stock position to close out. So which means you pretty much have to make a margin account. But the trick is you don't really want to go on margin. And if you do go on margin, don't go heavy like I used to, because that is when real bad things can happen, because then you're forced to sell a position before you may want to because of the margin calls and those kinds of things, or deposit more money. Plus, if you lose money, you're paying interest on that margin. Usually I used to pay like 6.5%. So say I had a 100K on margin, 6.5% over the course of a year, that's $6,500. Not fun if you're losing money and you're paying margin. So when short-term trading, try to stay away from margin, in my opinion, even if you think you're so right, because I felt I was so right on so many, and sometimes it just didn't go the way I expected. You know, maybe my numbers were all right. They blew them out, but the stock would go down, or vice versa. So these 4 tips, hopefully, guys, should help you immensely as a short-term trader. And as a beginner, to understand these tips are critical, in my opinion. They're critical because you're going to need them every step of the way. I thank you so much for watching this today, guys. If you have not subscribed yet, you may want to. I talk about personal finance on the channel, talk about entrepreneurship. I'm an entrepreneur, so I give a lot of tips. And we talk so much about the stock market on the channel and do videos like we did today. Hit that thumbs up button if you enjoyed, and have a great day.